three different streams going on, so you get a wide variety of fin crime professionals in different roles. So as a tech provider, that covers a big basis. And I think as a provider, you really understand the people that we want to have conversations with.
Every year they have all new topics coming in. It is not a repetitive thing which I have seen year on year. Always a diversified line of speakers, and always the subjects are just absolutely outstanding.
Okay, hi everybody. Well, it's good morning, good afternoon here in the UK. I think a little bit earlier for you, Chris, in Charlotte, I believe. Yeah.
Yeah, we are. It's still good afternoon here.
Good
I think
afternoon.
you're 4 hours ahead of me at this
We are.
at this point. We're in that interesting week period where we haven't fallen back yet.
Exactly, yeah. So welcome here to Chris Caruana. He's CEO and co-founder for C6 Intelligence. Chris is going to be with us on the 13th of November in New York at Transform Finance Financial Crime Leaders Summit as well. Chris will be chairing the event and all proceedings. So we're super excited to be back in New York in a couple of weeks. So we thought it'd be very nice to have a bit of a pre-launch before the event, and we've got a few questions lined up for Chris today, and just wanted to dive a little bit into Chris's background and experience and his thoughts around within the financial crime landscape today, and obviously looking ahead as well to next year and beyond. So welcome, Chris, to the show today. You've obviously spent much of your career you've had decades of experience with a specialty in financial crime on both the buy and the sell side, which is obviously super interesting. Just diving straight in, what threats do you feel US banks and financial institutions need to pay more attention to? So looking ahead to 2026.
Yeah, I'll start. So first of all, thank you. Thank you guys for having me. And I've always since I went, first time years ago to a Transform Finance event, I've always enjoyed the content that Transform Finance offers to attendees, the quality of the speakers, the topics that we're talking about. So thank you guys, and thank you for the opportunity to actually chair your New York event. The Charlotte event was fantastic. I thoroughly enjoyed that one, and I'm looking forward to New York. What do US banks and financial institutions need to consider, think, worry about for 2026? I'm actually going to start with what I think are overhyped or maybe overblown risks to consider. And I know I'll get some blowback for this one, but deep fakes, synthetic videos, I'm not saying they're not an issue. Are they as big of an issue as folks think they are? I say no. And here's my rationale behind that, which is, while it looks like fantastic marketing fodder, like, can you tell if this is the real Chris or the fake Chris? While that's fun to do, the reality of it is, if the bank is expecting its end user to do that, they've already lost, right? So deep fakes are more of, and there's plenty of signals behind that video in which the bank should be immediately saying, this is not a real thing, I don't want to show it to the client. Or I should be able to protect the client from even seeing that in the first place. So again, I think the bank has sort of lost the plot if it's allowed a deep fake of some way, shape, or form to even get in front of the client in the first place. So yeah, while they make for fun and enjoyable videos to watch on your LinkedIn feed, I'm not convinced that deep fakes are as big of an issue. So when I think about those in 2026, it's not something that we don't need to address, and they're fairly sophisticated. What I am saying is that the controls available or at your disposal today to prevent those from happening are already there. We don't need some super sophisticated technology to stop that. So that's one. What else do we not need to consider? I'm not convinced that the regulatory landscape is going to change that much next year as it does this year. In the US, if anything, we've seen a pause in regulations that were, say, tried to be pushed through or tried to roll out from previous administrative setups at some of the regulatory organizations. that are getting paused now as some of the administrative oversight and executive functions at some of these organizations are turning over. We're seeing those get paused. Most notably, UBO issues. We're seeing the investment advisor rule here in the U.S. Get rolled out, but get rolled out somewhat sloppily. The industry's pushing back on some more guidance, and they want some more information about that. We've been hearing about crypto legislation forever, and we don't see any sort of light at the end of the tunnel there. So I feel like the regulatory landscape or the regulatory regime and expectations around banks are going to look very much the same next year as they do this year.
Mm-hmm.
What do I think will get worse, or do banks need to get better on? I think we've talked about this beforehand, and that is some of the fraudulent activity and how fraudulent activity passes through their organization. I mean, scams has been a hot topic for a very good reason. And it will continue to be a very hot topic into next year. And the reason I say that is not because we're not thinking about it, talking about it, or doing anything about it. It's because the sophistication level in scams and the way in which illicit actors go about perpetrating them continues to evolve. It is a game of whack-a-mole. So the tools are out there, but I think the tools very much point to I have an issue. How do I go ahead and solve that? Instead of saying, I'm going to continue to have issues with my customers being defrauded, de-scammed. And again, I don't think that deepfakes are going to be a big perpetrator of this. Obviously, some folks or a small subset of folks will fall for them. But the way in which we go about preventing those or addressing those in 26 has to be more of instead of going out and trying to address the issue, just knowing that I'm going to continually have issues. So how do I have something at a macro level that looks at risk across the board, that looks at my scam risk or my scam indication or my fraud indication at an account level instead of at a transaction level or at a behavioral level or at an identity level. And that's what I think about in 2026. On the money laundering side of things, I very much see it being BAU. I mean, we've been talking about technological advancements in AML programs since I've started in the workforce. What's reality versus what's fiction? I think we'll be saying the exact same thing next year.
Okay. Well, that's a very good summary. Thank you. And you've touched on some of the points I think we were going to delve into further as well. But
Sure.
yeah, that's very, very clear indeed. I mean, maybe we could pick up on, I know you've mentioned, we talked about social engineering scams and authorized push payment fraud, which are both obviously still on the rise. How do you see these types of fraud types evolving? So maybe in terms of what's working, what's not working, in terms of prevention.
Yeah, so super interesting. I was just speaking with a client of mine the other week about evolution of a scam, right? Historically, fraudsters would turn around and say, and get you to make some sort of transaction on your credit card. Or they've said, hey, this transaction is a fraudulent transaction. Call in, give us your information, and we'll take care of it for you, right? So you call in, you give your personal information, and then they go and they steal all of your money. But what we're seeing now is almost a layered scam approach, which is the bank now have some sort of control or system in place to catch those sorts of scams, right? Or to catch that sort of entrapment of my clients where they're authorizing an illicit actor to actually move the money. So what the fraudsters are doing now is they're saying, okay, I'm not actually going to run a scam right away and pull their money directly from that account immediately. I'm going to get them to go and actually say, look, execute a fraudulent transaction on their credit card, or I'm going to get them to buy something that they shouldn't have. Then I'm going to get them to give me my bank information. And then I'm also going to call up and pretend to be their bank and tell them that we've moved their funds to a secure location, or tell them that your bank information has also been compromised. That person who just called you about that illicit transaction or about that transaction that you just made on your card, they're a fraudster. Believe me, I'm not. And it turns out to be the exact same team that's essentially outing themselves in order to go for the bigger scam, right? You've been scammed out of $100 credit card payment. Don't worry, I'm from your bank. we're going to move your funds into a secure location and we're going to cancel that credit card and we're going to reissue you another one. We just need this information. And so what you're seeing is a layered scam approach here where they're willing to trick you into that easy $100 purchase, say that's a fraudulent one, even if it wasn't. And then they're going to pretend to also be your bank and say, I want this money, or we're going to move your money over. We need your information to help do that. So I think that's where you're seeing an evolution of APP-related fraud, scams-related activity. So it's not all money mules at the moment, but make no mistake, money mules very much are at the crux of any sort of, say, large-scale fraud ring. Because once I get that information from you, or once I get access to your funds, I then need to move them somehow, right? And that tends to look like a one-to-many, a many-to-one sort of setup.
Yeah, absolutely. That makes sense. Okay, so then moving on, just talking about, you talked right at the beginning about AI and deep fakes as well, and synthetic IDs, voice cloning, creating new fraud vectors. How can fraud teams, do you think, realistically defend against these when the tech is obviously moving so fast as well? I know you have touched on this at the beginning, but perhaps you can just dive in a bit deeper there.
Sure. I think there's signal data behind these videos or these voice recordings. So I come back to what I said at the beginning, which is like the end user isn't going to recognize that. So the bank has to stop it before it even gets in front of the client, one. And two, the technology to do that is kind of here right now. Right now, we're recording this, right? There's some sort of points of information behind this in the quote unquote data or pieces or signals of this video that if you look at those from a technical perspective, you can understand that this is a rational or real video happening between us, right? If I were to go and create that with some sort of video creation tool or use some sort of artificial intelligence to artificially create a replica of this, it will have its own signature of data behind it, which I can then tell that it was created in this mode or this module, right? So if you have the tools available to go ahead and identify that this was being created on Zoom or on Teams or something behind it gives you the indication that this was created by you, the user, versus some sort of agent, some sort of other system or tool to create this, that in and of itself is fairly easy to pick up on. The hard part is if you get it in front of my parents or my grandmother or someone just sort of getting into or trying to access their bank details, or they've been called by someone and they said, look, this is an issue, you have to contact us immediately. That becomes really hard. So what do you do in those instances if as a bank you haven't stopped all of this? Your educational piece needs to change as well too, right? Which is you need to have an SOP as a bank, a standard operating procedure as a bank, that when you, end user, client, customer, get scammed, or when we ask you for certain information, these are the only things we'll ever ask you for. And you already have this sort of educational piece coming from the banks to their end users right now. They just need to update those to account for someone else or some system or some illicit actor calling up their client base or sending them an email. They just need to adjust for that, right? So these aren't,
Yep.
This is why I say this isn't as big of an issue as maybe a software vendor might want to make it out to be. However, if you're not addressing these as a banker, if you don't understand the risk or you don't understand how your client base ends up getting tricked or consumes this information from an illicit actor, you will fall behind, and now they do become a problem to your bank.
Yep, that makes sense. How about we'll bring in a bit of the AML side, money laundering side as well. And you talked earlier about this because obviously we're looking at both fraud and AML as well. So just in terms of with fraud teams often struggling with balancing stronger controls against friction for customers, what do you believe is the right way to strike that balance in 2026? And in addition to that, how do you believe AML teams think about this balance?
I'll take those in reverse order, which is like, I mean, I'm definitely going to catch a lot of flack for this, but AML teams don't think about that balance that much, right? My anti-money laundering, if I get 999 of that correct, but I get one wrong, It's a big issue there, right?
Mhm.
For an AML team or an AML program owner. And then the bank has a big issue because you don't want to be the bank that perpetuates money laundering or has money laundering flowing through your institution, or at least that you know about, right? We won't even get into willful blindness pieces. So the customer experience, while important, it takes a backseat for anti-money laundering. And then this is where business or internal friction comes in, because the business has a business to run. The AML team says, I can't get this wrong at all. Those two are at odds with each other, because when you try and move at a certain speed and you're driven by revenue-oriented needs, there's a trade-off somewhere when you go with speed, right? And normally that trade-off is, yeah, you're willing to take some risk, you're willing to take some chances in your control environment in order to trade off speed and execution for control and assurity, right? And so you have revenue who says, I'll go 1,000,000 miles an hour because I have targets to hit. And then you have a control environment like an anti-money laundering program that says, I can't get anything wrong. Now, somewhere in the middle becomes the truth. Fraud, on the other hand, or fraud teams, on the other hand, and by the way, this is why like folks talk about FRAML, but it's like operationally, these are two diametrically opposed ways of operating different control environments. And it's not that fraud doesn't have control environments, but what they use to go ahead and mitigate the risk around those controls, it's okay if they miss some, right? Like that's okay. No one's going to be in a tremendous amount of trouble. You just want to try and get better, and you want to try and plug those holes. That's also why they can take a little more risk with managing fraud programs. I can go and I can try and get access to the best systems, the best technologies. I can go and get point solutions that'll try and solve one specific problem for me. And I can try and be a little more bold and brave in allowing the customer experience to be minimally impacted versus still being able to control or prevent any sort of fraud from happening at my bank. So the customer experience, and we have seen, particularly here in the US, I've also seen it over across the pond in the UK and in Europe as well too. We went on a pendulum swing from the customer experience is everything, there can be no friction whatsoever, to customers getting massively defrauded, to then banks and even the end user saying, look, I'm okay with that one extra step in the process if it means you can give me X amount of percentage confidence that I'm not being defrauded, right? So it's not a reintroduction of friction. It's just a general consensus between the provider and the end user to say, we want to protect you as best as possible while giving you the best possible experience. There's a balance that we need to strike here. Is it okay if we ask you one more question? And the end user is going to say, of course, so long as it's not me sending 5,000 pounds or dollars to that I'm never going to see again and doesn't actually end up with my relative.
Makes sense. Thank you for that. Really good insights there as well. Obviously bringing in the AML side as well. So obviously at the event we're covering off, aren't we, all those whole plethora of topics across fraud and anti-money laundering as well. So really, really insightful. In terms of, let's touch on collaboration a little bit now, just across the ecosystem. It might be an overused word somewhat, but obviously fraud is rarely confined to one institution. Where do you see perhaps the best practice examples of cross-industry collaboration or data sharing where it can make a difference, or where it's made a difference?
That last comment that you made around data sharing is probably what prevents us the most from being orders of magnitude more effective at fraud prevention than we are right now. And the same thing for identifying and actually doing something about money laundering. Money laundering is a bit of a harder nut to crack because structurally the regulatory environment, the regulatory regime everywhere, it's not constructed, and this, again, I might catch some flack for this one, Gene, but it's not constructed to prevent money laundering per se, right? And that's why we say we detect money laundering, right? Because normally it's happened on the sum of all the parts. We want to make sure that we've identified it and we do something about it. So the regulatory regime isn't set up for folks to prevent it per se, and it doesn't incentivize us to be bold and to try daring new things and to use these fancy new technological capabilities at our fingertips. We're incentivized to make sure that we address the regulatory needs as they're presented in front of us. Excuse me.
Yep. No, that's all right. Yep.
But there's a tremendous opportunity on, we'll say, the fraud side of the house from a collaboration perspective. Actually, some of the banks in LATAM and some of the government agencies and the regulatory agencies, particularly in LATAM, I think about Mexico, I think about Colombia, even Brazil to a certain extent, they're mandating that the banks themselves start to share information, start to collaborate a little more. It's a bit of more of a challenge in places like Europe, although the European Central Bank is pushing for this as well too, because you have data privacy concerns. And then how does that function seamlessly with a share information amongst your institutions about your client base? So you have privacy concerns that are at odds with, you need to do more around collaborating and sharing information. And then someone says, well, wait a minute, you can just use homomorphic encryption or some sort of encrypted information sharing. That's also not the easiest thing to do. And then all of those things, assuming you can solve for all of those things, you're missing the competitive angle to this. What's my incentive as an organization from a competitive angle to share my client information with you, my competitive bank, that can then start to build a more enriched profile about what is essentially my client and say, you know what, I'm going to go and offer them those products, services, goods at a more competitive price, right? Or I see that they're using you for cards and they're using me for my retail deposits. I'm going to go after and aggressively try and target them to use my card products instead, or to use or to loan with my bank. So there's a competitive angle to this that I think folks maybe don't want to talk about, but it's very much a real thing, is what sort of value am I getting out of that? And if it means I risk my customer relationship over maybe getting a few more fraud or, we'll say, financial crime signals that I can utilize in my models, is that a worthwhile trade-off for me if no one's saying I have to do this?
Yeah. Okay, very insightful. So hopefully you're not going to get into too much trouble. But we're all about debate here, aren't we? And getting views out. So, and equally, at the event, hopefully lots of discussion and as well during the day. So one final question from me, just looking ahead at the future, bit of future gazing. If you had to advise financial institutions on one or two priorities that would define fraud and or AML resilience over the next 3 years, or 2 to 3 years, let's say, what would they be?
If I had to, that's a lot of what I do at C6 is precisely what I do. Can
you distill it down, perhaps?
Yeah, a quick note though, like, not everyone's going to agree with this, and that's a good thing. So the debate, like you said, we're all about debate here. I hope folks come up to me at the New York event and say, Chris, I heard you say this, you're dead wrong, and here's why. Because that will only move the needle forward for us. Say, hey, that's something, maybe that's something I haven't considered. Maybe that's a perspective I don't have. When I think about future strategies ahead, I alluded towards this at the beginning, which was we are looking at the identity of someone. We are looking at their transactional patterns. We are looking at their behavioral patterns. But you tend to look at those, and you tend to look at them. You say, well, I see them all. I collect all of that about my client. But you still tend to look at them through only a transactional lens or only a non-monetary activity lens. You're not looking at those at an account level. And this is where consortium, or we'll say collaboration, also starts to come in. You're not looking at those at an account level for predictors of not just perpetrating fraud, but becoming a victim of fraud. It's interesting, when I was building a KYC product or a customer risk rating product, one of the things we needed to consider was, even though that person is not a bad person or a bad actor, if the way in which they behave makes them more susceptible to be some unwitting money mule, or be scammed, or be authorized to send their funds to a scammer, you have to take that into consideration as part of your risk classification at the account level of your client. And it's not because they're a bad person, it's just because they simply are at a higher risk of this happening to them. Whereas historically we've looked at it and said, is that bad activity? you now have to look at it and say that I'm going to assume all that activity is good. However, they have been duped in some way, shape, or form. And we're just not seeing that if we're always looking for bad activity in the way in which they interact with my institution. I should be looking at their propensity or their potential to be subjected to this sort of illicit activity, scam, whatever it may be. And that's how you need to start to think about these things. And then therefore, if you start to think about it in that way, you start to look at your customers slightly differently. You start to look at the tech stack that you need in order to control and protect your organization. And then you'll quickly find that probably what you have right now is some sort of amalgamation of all of these capabilities, but how am I actually stringing those together to address these sort of new age of risks, right? And then am I able to detect layered scam events that we talked about earlier on, where they, that credit card payment was a fake payment, or you were tricked into sending that. Don't worry, I'm from your bank. Move your money over to this account. I've created it for you. We'll take care of everything. Those sort of layered scam schemes you now start to think about.
Absolutely. That's brilliant, Chris. Thank you so much. And as you said, I think today was very much about trying to look at financial crime overall, across fraud, AML, and through the eyes of both the institutions and obviously the sell side as well. So, but thank you so much for bringing sort of all your thoughts here today, and obviously gives a little bit of a taste, a feel for perhaps what we've got in store in New York in a couple of weeks as well. I don't know if there's any final comments you wanted to add at all.
Just if you're not at the event, you're missing out.
Brilliant. Yeah, absolutely. Look forward to seeing you there. And thank you very much for today, Chris. Thank you.
Thanks.